Good morning and welcome back to Daybreak on this 24th day of March 2021. It's now 19 minutes to 7 o'clock. My name is Sam Gituko and we want to dive into the conversation around business and taxation. And to introduce the panel, I want to start with Phyllis Wakiaga, the Chief Executive Officer at the Kenya Manufacturers Association. She's joining us via way of Skype. Good morning, Phyllis.
Morning, how are you?
Great, and it's good to see you this morning. Then Edwin Makori is the CEO at the Institute of Certified Public Accountants of Kenya. Karibu sana to the show.
Yeah, good morning.
And then we have Lydia Boshere, who is an entrepreneur. I hope that's the right pronunciation of your name.
It is, and good morning.
Good morning, and thank you so much for joining us. And before you start on that, let's take a look at some of the stories that are making headlines in the business world, because the national carrier, Kenya Airways, has reported a 36 billion Kenya shilling loss in its full year 2020 financials. The loss, though heavily attributed to the ongoing COVID-19 pandemic, is once again historic in Kenya's corporate scene. Fazal Ahmed explains.
National carrier Kenya Airways has reported a near 3 times loss expansion to 36.2 billion shillings for the financial year 2020 compared to 13 billion shillings in 2019.
28 billion, which includes the 6 billion that you mentioned.
According to Chief Executive Officer Alan Kilavuka, the COVID-19 pandemic exacerbated the already bad financial state of the airline.
Our numbers were, in terms of passenger numbers, was 60% down compared to 2019. Like you said, maybe not very surprising. That's what we had projected, especially at the onset of the pandemic. But now, going forward, what is more important is for us to try and reduce the effects of this situation that we found ourselves in.
KQ revenues slumped by 59% to just 52.8 billion shillings from a high of 128.3 billion shillings in 2019. This as passenger revenues shrunk by 69.9 billion shillings in the period following the grounding of flights between April and August last year. The total number of passengers carried in the period, for instance, fell to 1.8 million individuals in contrast to 5.8 million in the previous year. The cost cuts include 22.6 billion shillings in savings from fuel, 27.4 billion shillings in navigation and landing fees related costs, and 3.4 billion shillings in employee cost savings from the reduction of salaries and company workforce restructuring.
Then internally looking at the business and to see what other avenues can we use to diversify, cargo being top on the list. So really focusing on cargo and seeing how that could help the business also to grow. But apart from cargo, we're also looking at our maintenance organization. So far we have been able to sign up at least 2 external airlines to come and use our maintenance facility here. We hope to get more.
Over the period, KQ fired 1,300 staff in its rationalization plan.
We want to augment the business, de-risk it, diversify, and grow in other areas. The third and probably important one as well is even as we continue to do that is addressing the risk that we have in terms of increasing costs that we have. So we are in discussions with our key lenders, we are in discussions with our key creditors and suppliers so that we can reduce our cost in that regard.
Okay. The airline says the conversion of 2 of its passenger aircrafts to cargo freighters helped in meeting the cargo demand despite a 28% reduction in revenues from cargo. KQ says it has received 6 billion shillings in support from the National Treasury as at the end of 2020, and with funds being appropriated through the first 2020-2021 supplementary budget. Fazal Ahmed, Citizen TV, Nairobi.
Right, and I want to begin with you, Phyllis. You may not be an expert in matters aviation, but obviously you're able to observe the structure of business in the country, and especially for Kenya Airways, which has for the past several years actually, has been making all these losses. And in a year that, yes, they had the cost cutting of about 53.4 billion shillings, but still ended up making a loss of that substantive amount. Yet, yes, key airlines in the world have experienced similar situations. Is it surprising that Kenya Airways is at this point in time? And apart from COVID-19, how would you attribute all these losses to?
Thank you for that question. And the aviation sector is a sector I understand. I worked in KQ for almost 7 years. And what KQ is suffering from at the moment is really the impacts of COVID. A big chunk of the losses they experienced last year are as a result of COVID. So there was the dramatic drop in passenger numbers because of the measures that were put in place. As you know, people were not traveling globally. There's a while there even cargo was not moving. So all that has affected the airline. And in addition to that, they do have assets that they have to continue financing, paying loans for, and a lot of other activities that still have to happen. But the aviation sector, as we know, it is a key enabler of many economic activities in the country. It's a small sector in terms of its contribution to the GDP, but the impact it has widely on the economy, from whether it's a manufacturing sector, the tourism sector, the transport and logistics sector, amongst others, is quite large. So it's one of those sectors, and you can see globally, countries are now coming up with measures to try and see what they can do to restructure loans and support the aviation industries. Of course, this has to be done in light of the fact that you also don't want to distort and offer too many farm-level incentives and distort competition in the market. But it's a reality that it's a sector that is important for economies globally, and it genuinely is one of the most hard-hit sectors due to COVID-19. And so governments are really restructuring things, looking at even taxation measures that have been put in place, including measures like minimum tax, which we've been saying for a company like KQ that made losses, they are still required to pay 1% of their gross turnover as a minimum tax, which I think is almost about 1.7 billion. So the need for us to relook at all these policies and how we support companies in recovery that have been affected by COVID, I think, is going to be critical.
Right, and Makori, this story has been going on for quite a bit of time, and the average Kenyan wonders, why do we still have to keep pumping money into a firm that has been making all these losses? What is the strategic reason why we have to keep investing in KQ?
I think just being able to look at KQ as a strategic asset is going to be very critical, because as an airline, it forms a point where we are able to link the country to many other destinations. And I don't think as a country we need to be able to do away with our aviation industry, because that's with the link that we have to the external world. And also with the much needed tourism that we highly depend on as a country, then we need the carrier to be able to bring in not all of the tourists, but at least a good percentage of the tourists. I look at it in terms of being able to have an asset that, if managed very well, efficiently and effectively, will be able to be the real pride of Africa. Because I compare KQ to Ethiopian Airlines. For many years, Ethiopian Airlines have not made losses. This year, Ethiopian Airlines is significantly hit because of, last year it was significantly hit because of COVID. Which took almost 8 months. But with that, they were still able to near break even in terms of their operations. So I believe KQ we should be able to go to the same direction. Just being able to look at what are the inefficiencies that they have to be able to make them effective. And with that, then we'll be able to see a turnaround. I know one of the biggest costs that they have is the leasing of the aircraft. And then there was a decision that was made earlier that still they're having to grapple with, which was the hedging of fuel. And at that time, they hedged at a very high price, and then the dollar rate really improved, and it was stronger against, the Kenya shilling became stronger against the US dollar. And that in itself plunged KQ into those losses.
Right.
So looking at KQ right now, it might not turn around immediately because we are in this pandemic for a while. But in the next 2, 3 years, 4 years, if measures are put in place, then we should be able to see KQ turn around.
Right. And Lydia, looking at this story that keeps evolving, what are your thoughts about it and the sustainability of the aviation sector in the country?
Well, I think when we are looking at particularly KQ, I mean, I'm a business person, but when I look at KQ, I don't want to just look at it from the profit-making side, because that's just one side of the coin. As Mr. Makori has mentioned, we need to actually have, you know, our own way of moving around, of getting to other countries, of marketing ourselves, and that's how I see KQ. It is, as we've already said, a strategic investment that the country in itself should actually take up, and maybe this nationalization process may work for us. We wait with bated breath, but I think we need not really just assess it from a profit-making point of view only. But of course, it would be a good thing if KQ not only turned around from losses, but actually made profit, as my other colleagues have mentioned earlier, that, you know, if we turn around the management, if we look at the teething problems,
right? Yeah,
if we're just very sober with you know, our review of the company, maybe we can turn it around. Every major nation of the world has a national carrier. Obviously, in 2020, you notice that when our countrymen and women were stuck in foreign destinations, it's only KQ that actually evacuated our people. I shudder to think of a situation where we did not have a national carrier. So for me, it still seems like it is a strategic area, and we just need to push through and be creative with it.
All right, and Phil is benefiting from your experience at KQ, and of course your ability to observe matters. So that plan of nationalization of the KQ, of course, it brought some heated debate in Parliament, and now there's that possibility that may be concluded. So when you look at it, how does it help KQ? Because yes, profit making is not the only factor when it comes to business, but it's a very important factor for sustainability of the business. So are we saying that we'll be fine not making any profit because government doesn't do business and is not intent on profits?
It's I guess the circumstances that have led KQ to go back to nationalization, because we remember a few years ago KQ privatized. And after its privatization became very efficient, was able to make profits. Those were the days we were flying high as the pride of Africa. But the situation in the aviation industry is probably leading to the necessity of nationalizing, because if you look at competitors, like even Ethiopian Airlines, Emirates, the Etihads, all these serious competitors are benefiting from a lot of incentives from the state. Some of them are benefiting from very cheap fuel based on where they come from. Others are benefiting from tax incentives from the states, and many other things that are making them much more competitive, and even national business that leads to their competitiveness. So this situation is probably necessitated by that. And if you look at the aviation sector, it's not just, I mean, KQ as an airline, you're looking at the airport authorities, the civil aviation. It's a whole sector that leads to a lot of either job creation, strategic importance to the nation. So this decision is probably to see how we can stabilize the growth of KQ, stabilize its profits, and over time, see if we can go back to the ideal situation, which of course would be a privatized airline, but keeping in light that you're competing in a globe where a lot of the key competitors who are doing well are companies that are highly supported by their nations. But KQ also, I guess, needs to continuously look at its cost base and its efficiency, because I remember at the time they were looking at, say, even the pay level. If you compare that with Ethiopian Airlines, like for pilots, it was almost 10 times what the pilots were earning in Ethiopian, and other inefficiencies within the airline. So even as we talk about the government bailing out KQ, they also need to introspect, cut down expenses as much as possible. But also as a continent, we also need to support the aviation sector. We've been talking for years about the Yamoussoukro Declaration that allows for free movement of air transport within the African continent. And I think in the spirit of the Africa Continental Free Trade Area, it's high time as African countries, we implemented the Yamoussoukro Declaration so that we could allow for people to be able to have the traffic rights required within the continent to enable us to grow our airlines in Africa.
Okay, all right. And of course, Makori, as we exit from this topic, there are all these allegations that because of the mismanagement, there are several stories that have been done detailing the mismanagement that has gone on at the Kenya Airways. Of course, you see the chaos that have been in the management of human resources. You've heard of people that have been laid off. So even as you nationalize, what is that potential of KQ getting back to where it was, or even getting better at a time that there has been all these questions of mismanagement and the mishandling of workers?
From where I see it, all is not lost. And it's just a matter of time and being able to put in the right strategy for KQ to be able to make it turn around. I think amidst all this chaos in terms of human resource management, being able to make decisions that, I mean, when management was making that decision and the board to be able to hedge on fuel, it was the best decision then, because if the dollar was at a very high rate at that particular point. But then the review of that decision was not as fast as it should have been to be able to turn around the KQ. Maybe the decision would have been to do it short term rather than long term at that particular point. So looking at it from a management perspective is just being able to see where is it that we need to rationalize. And Phyllis has rightly put it. If you're going to pay your employees 10 times more than all the other airlines, you don't expect to be able to make any profits. If we are going to lease aircrafts that are not efficiently used to be able to derive the revenues that we have, and now we're still with COVID, most of them are grounded because there's little movement from one region to the other because of the COVID restrictions.
Okay.
And I think that informed the decision to be able to move to cargo and be able to effectively and efficiently utilize those aircraft, because they're not meant to stay on the ground. They're meant to be flying every other day. So what are these strategic decisions that need to be put in place to be able to turn around KQ? One is efficiently being able to look at how then do they have human resource that is compensated, yes, if a good compensation, but comparable to other airlines across the world. And then two is just being able to see how then do they effectively utilize the aircraft that they have in a more profitable way. I think they must have done their cost-benefit analysis by going to cargo, and we then should be able to tell us in another 3 months, is it bringing in profits? If not, then they need to be able to come up with a new strategy. And the big strategy is also the COVID strategy.
All right.
How do they then redeem their reputation right now as still the premier carrier in Africa? And that will only come with the kind of service that they're going to give to you and me and the international customers who are going to come in.
Okay.
And that's where the focus should be.
All right, let's focus on a different story where the Central Bank of Kenya has formally announced the expiry of emergency measures aimed at mitigating the effects of COVID-19 pandemic on borrowers in the country. The regulator has therefore announced a 3-month window for all borrowers to regularize their loans with commercial banks. Dennis Otieno reports.
The 1-year loan repayment relief by the Central Bank for borrowers in the country ended at the start of March this year. In a statement, CBK highlighted various restructuring options for borrowers, which included expansion of payment period, moratorium on principal or interest, and waivers on interest or fees. Since March 2020, lenders restructured loans amounting to 1.7 trillion shillings by the end of February this year. But the impact of this coronavirus-triggered loan restructuring has eaten into banks' end-year profits, as reflected in various recent results. KCB Group posted a 22% dip in profit after tax to hit 19.6 billion shillings for the full year ended December 2020. The performance hit by increase in loan provisions to 27.1 billion shillings. During the period, KCB restructured 106.1 billion shillings or 19% of its total loan book. Cooperative Bank's total loan loss provision for the year ended December 2020 tripled from 2.5 billion shillings to 8.1 billion shillings. The lender has restructured loans worth 49 billion shillings, which is 17% of its total loan book, which grew to 287 billion shillings. Stanbic Bank restructured loans worth 40 billion shillings during the period, with provisions hitting 4.3 billion shillings. Absa Bank restructured loans worth 62 billion shillings, representing 59,000 accounts. Borrowers now have 3 months to regularize their loans. Dennis Otieno, Citizen TV.
All right, of course, talking about that incentive that came from the financial sector, I believe it was announced on the 18th of March 2020, and now it has come to an end. And I want to begin with you, Lydia. What sort of an impact would you say this restructuring of loans has been on businesses at a time that there are all those challenges of the business itself, challenges with the cash flow, and now that is being taken away?
So, well, we experienced temporary reprieve because we could go and renegotiate our positions with the bank, and we had the confidence that this was something that the government already had ordered. So, you know, I wasn't going to really plead with my banker. We are grateful for that. You know, 1 year reprieve has been historic. It has never happened. But honestly, the businesses have not had a turnaround yet. Cash flow crisis is still a problem. We have a lot of consumers whose purchasing power has really gone down, and therefore I'm not too sure, you know, how we are going to be able to pick on from here, because business has not quite picked up well enough. The effects of the pandemic are still here with us. The pandemic is still here with us, actually. So we wait and see, but it is not looking very bright where we are headed to.
And that report by Dennis talks about 1.7 trillion worth of loans had been restructured. Currently, 570 billion are still being restructured, so that such that 90% of the gross loans is what has been affected. But Makori, when you look at this, you're looking at the different commercial banks. Of course, they are reporting their financial situation 1 year into COVID. And most of them are reporting a dip in their profits. So obviously, even their business is not looking up as it should. So how do you reconcile the interest of these financial institutions vis-a-vis of the business persons like Lydia?
I think it's a major challenge, and even as they reported their reduced profits, they're still in billions. So it means, looking at it objectively, is that they must have done something to be able to make them efficient, to be able to make the profits that they're making. I think, as Lydia said, is just to be able to look at things objectively. We've had over 1.7 million employees laid off during the COVID period. The situation has not improved. We are now in a third wave, which we don't know how long is going to be with us. The effects of COVID are yet to be felt because we are in COVID itself right now. Once you're over with this phase, there's a new norm that is going to come in, and there's going to be an impact of that. We don't know how long that is going to take. Businesses have been adversely affected because of the health protocols and social distancing and all this that is coming up. Some businesses closed a long time ago, and it's estimated like around 600,000 businesses closed during COVID. So what that means is that we are yet to feel the full effect of COVID, and looking at it in terms of even the growth as a country, which was projected at 5.9%, I don't think we're going to attain that. Maybe it would have been 2.4 as the CS said. 2021 is going to be even worse because we've not yet come out of the pandemic yet. We are now on a third variant of our COVID-19 pandemic, and we're not very sure where that is
Third wave, you mean?
Because there's been a spike in I mean, 22%
positivity rate
is a high positivity rate, so that you tell us now we need to be more cautious and be able to look at how we take care of ourselves as citizens.
Right.
I'm asking myself, suppose this becomes catastrophic, then it means that we go back to where we were in a lockdown. How long will that take? Maybe 2-3 months? We'll not be able to come out of it. So coming back to the loans, I think putting all these things into perspective is what we really need to ask ourselves. Will the borrowers be able to repay their loans, even with restructuring? Because they're saying we're restructuring the loans, yes. But is there the ability to repay the loan? Because they are reduced incomes. We clearly know that the economy is suffering because of the pandemic. Therefore, the disposable income, and prices have gone up, fuel has gone up, and in effect, price of commodities have also gone up.
Right.
VAT went up to 16%. Just the other day at the beginning of the year, so we had 16%. There was a revision of PAYE, so there's more taxes being paid by the would-be borrowers. We have minimum tax that is set in. We have installment tax that has to be paid, and many other obligations that set in.
Right.
And businesses have to meet this. So looking at it from the business perspective and also from the individual perspective who's going to pay the loans, there's still a hit.
Okay.
And maybe we need to be able to have more concessions to be able to cushion both the individuals and companies right now to the end of the year, maybe sometime September or October. Then now we can be able to review and say, are we in a position where we can have fully restructured loans that can then be able to be repaid? Because we might be restructuring loans of people who, and I mean, the rates of debts are going up. Maybe a majority of those will be able to live and I mean,
right,
through natural attrition that comes out of COVID. But that notwithstanding, that those who are going to be laid off because businesses are not doing very well. So are we assuring the economy that the businesses and individuals that the economy is going to grow? And I'm not sure what informs the decision, because things look very bleak ahead of us.
And yet the government needs to continue running. There are staff of the government that needs to continue being paid, as Sarah Soguna told us. But Phyllis, you work with the manufacturers, and of course there was this benefit of restructuring loans for some of the institutions. We are told that despite the manufacturing sector not growing as much as it should have, way before based on projections before COVID, it has also benefited because of new strings of manufacturing. If you're talking about the COVID-19 related equipment, if you're talking about, we are told that agricultural investment into manufacturing could have improved. I don't know whether that is true. What would you say has been the impact of this restructuring, and is it the right time to review it? Of course, the review has come, the central bank has communicated, but how is it going to affect businesses in the sector?
As my fellow panelists have said, we are not yet out of the woods regarding COVID-19. We are currently going through a third wave, and it means that the challenges business have faced in the last 1 year are only going to be prolonged. And if you're looking globally, even countries like America have recently either enhanced or looked at the economic stimulus packages they had put in place and tried to continue seeing how they can sustain their economies during this difficult time. So from a bigger picture, it's probably something we need to look at. Last year we had measures that the government had put in place that were very positive in terms of releasing cash flow into the economy, like that reduction of the pay as you earn. It enabled people to have more money in their pockets and improve their purchasing power. But the reality is it's not easy for governments, because they're having to weigh and balance a lot of different issues. They still have to pay workers, they still have to provide services to the citizenry. So it's really a delicate balance, and seeing how we share the pain during this difficult time. The restructure of loans was also useful. I think the business person represented in this panel has mentioned that. People were able to get reprieves from the bank. They were able to at least reduce the demands on their cash flow by restructuring, getting the moratoriums and all that put in place. So it was very useful. So it's necessary to see how we can sustain that, but also how the credit guarantee scheme that government was putting in place can be enhanced so that SMEs can be supported. Because the credit guarantee scheme was also going to be one way to ensure that businesses are able to borrow. I've also seen different partners like the MasterCard Foundation working with the local banks and putting in place the credit guarantee schemes that are going to enable SMEs borrow at lower interest rates. So these are commendable. But I think we need to go back to the drawing board and look at a holistic economic recovery strategy. Now, as we are going into the budgeting process, that's something we need to look at again because we are not yet out of the woods. For the remainder of the year, we will need to see how we can support the economy to be able to recover. And when an economic stimulus package is put in place that it is adequate enough to support recovery, you see a faster recovery of the economy. So that's why you're seeing countries like America going out of their way because they know that that is what will stimulate and enable the economy to be resilient and sustained even within the COVID pandemic. So I think during this budgeting cycle, we would like to see what can be put in place to stimulate the economy, a reduction of the recurrent expenditures, and a focus on just sustaining and stimulating the economy for the remainder of the year as we reel through the pandemic.
Right, and of course the budget policy statement is already out, talked about some 3 trillion budget, I believe it was 3.02. We're waiting for the processing of that. But let's talk about the taxation in different businesses. And now the minimum tax that was introduced at the start of the year, 1% of the turnover of businesses, whether they make losses or they don't. Maybe we could start with that, Phyllis, as you reflect on the impact of this in the manufacturing businesses that we have in the country.
Broadly, I think, as I've said, we are still within the pandemic, and I know the principles of taxation are really around fairness, certainty, convenience, and efficiency. And even as we tax businesses, we have to look at the reality of the environment that they are operating under. And some of these taxes will have a negative impact on businesses, considering already that we are having a difficult and struggling economy, and then putting in place new taxes at a time like this really deals with the issue of predictability. We are already having businesses reeling from the challenges of COVID, and then we throw in more spanners in the works. And you did mention specifically the minimum tax, and we've made our concerns known about it. It's a tax, and the way it's been worded, it's a 1% of the gross turnover. And I was giving an example earlier that a company that is loss-making like KQ, if you go as per the law that was put in place and as per the wording of that law, they would still be required to pay about 1.7 billion in taxation, which I think would be ridiculous. So a tax like this is really leading to deterring startups, increasing the cost to consumer, because what happens is in our country where we have distribution system, each of the levels of distribution of products will have a 1% turnover tax, meaning that that cost will eventually be passed down to the consumer. So as I said earlier, that we really need to be taking a backseat and looking at our macroeconomic policies and saying, in the midst of COVID, what do we need to do to create a stable policy environment so that businesses are not getting new taxes, new compliance processes, and new policies that are affecting the stability of business in an already difficult time. So as we look at this economic recovery, we should look at it from that lens and say, how do we keep things as stable as possible? Even excise taxes, we've been having conversations about the excise tax regime in the country, and some of our members have had an increase of 25% in 3 years on their excise tax. And they have demonstrated and even shown from the numbers that this has increased, yes, the amount collected by KRA, but dropped the volumes, meaning that, in effect, if the taxes had remained at the lower level, chances are the volumes would have gone up, the revenue authorities would have collected more. And the other thing they have done is increased illicit trade. So in some of those sectors, we've seen illicit trade rise from 2% to almost 26%, because what happens is when the taxation goes up for excise by 25%, a lot of illicit products then get into the country through the porous borders. So we need a holistic conversation about taxation policy, and more so in light of COVID-19, on how we are helping businesses to survive the pandemic first, how we are keeping the environment stable for them, and then we can discuss taxation when things are normal and back to stable businesses in our economy.
And Lydia, as a business person, yes, minimum tax has been introduced. I don't know how exactly it's going to impact on you, because the justification has been that you want to reach as many people as possible to be financing the operations of a government, because at the end of the day, we need service delivery. But as a business person, how is it impacting on you, and what would you want to see?
Well, I'd like to give you a practical example so we break this down, because minimum tax is actually one of the very complex tax. It looks very simple in the face of it, but it's quite complex. Let's take, for example, flour. I sell a lot of flour. You know, about 65% of my gross turnover is accounted for by flour, because people eat ugali and chapati every day. So wheat flour is 1,500 shillings. I only make 20 shillings out of it. It is the standard profit, because you sell about 5,000 to 6,000 units a month, and it pushes the other products. You sell flour and other things. So 1,500, 1%, and I make 20 shillings, okay? So 1% of 1,500 shillings is 15 shillings, isn't it? But I make 20 shillings. This 20 shillings is inclusive of the expenses and the costs that I incur. So I collect this flour from industrial area. I pay the KRA through the NMS, 1,000 shillings every day for every truck that I send there for parking charges. I pay for fuel, and you know fuel now, more than 50% of our fuel price is actually taxes. And then I pay the driver, and I comply, payee, NHIF, NSSF, all these are taxes. He comes to me, I pay the other employees and rent, for which I still pay, you know, indirectly the 10% for the rental income and VAT. And so when KRA is telling me that I should give it 15 shillings out of the 1,500, 15 shillings, sorry, out of the 20 shillings that I make, the KRA is telling me to have 5 shillings to take care of all these other expenses. And keeping in mind that I'm already complying with about 4 or 5 other heads of tax. Now, my contention is this, that it is true that in the short run, you know, within the first quarter, they may make more money than ever before. But actually, this is going to kill more businesses, because, look, I am not at liberty to increase the price of, I'm not at liberty to increase the profit. Why? I am not the only player in the market. Number one, there's competition. But number two, there's already a recommended retail price that the manufacturers have already imposed on the product. So already the business practice has been, and this has been standard. If I work backwards on that, on the 15 shillings, if I was to give KRA 15 shillings and take care of my other expenses, it would mean that I would be needing to make about 7% of a gross profit, so that I can take away their 1%, 3% is usually, you know, 2 other percent is usually the cost incurred, and then I have 3% as a business person or entrepreneur, because I did not put up a business to pay taxes, isn't it? Yeah. So when you look at it and you're telling me maybe now to, instead of make 20 shillings, which is just about 1.25% gross profit, you're telling me to make 7%, which is about 70 shillings. How do I sell this flour? Or are we saying that I pass on this cost to the very same Wanjiko, the end consumer, who is already paying so much, who have already told you the buying power has actually been compromised due to the, not only just the pandemic, you know, increasingly the business environment has been growing harsher and harsher every day. Right. He's already, my colleague has already stated out that we had the 14% VAT moved up to 16%. And so our contention is we are not making the 1%, we cannot be able to afford the 1% minimum tax on a turnover, because you then are assuming that I'm not incurring any costs. Right. Yes, and that really is our contention. If my costs are about 2.5%, then really maybe I would need a bit more convincing, and even, for the KRA to demonstrate how exactly I comply with this law without killing me. Because our current contention is that we are not going to survive it. And really, what we are saying also is that I'm already compliant. I have been complying, and I've been incurring other costs in paying other heads of tax.
Okay.
So if you're saying that you want me to pay more tax, do you kill the little that I've already been giving you, or do you help me grow so that I can pay tax? Because we cannot grow our tax without our people growing. That is really our contention. Businesses must grow.
Okay.
Yes.
And excuse me, Makori, being at TISPAC, I'm almost certain that you've studied a lot of taxation. And so when you look at this, is it, whatever she's explaining, is that how it works? And as you look at the cost of taxation in running of businesses, how then do you survive as a business so that you have appropriate margins to ensure that you continue, or rather your business remains sustainable?
Maybe just to be able to start, the idea of having the minimum tax was a noble idea at the beginning. And it was just to be able to target companies that had made losses for a very long time. And the government needed to find a way of being able to tap into this. But the enactment of the law in 2020 to be able to have this become effective from January this year is what is bringing out now this, what the SMEs are just complaining about, and Lydia is representing one of them, is how the tax has been structured. One, you are paying 1% of your turnover. So it's a gross of everything before removing any expenses and other taxes that you pay, because gross includes VAT, excess duty, and other expenses that you need to be able to incur. So you're paying tax on tax in the first place. You are meant to compare this, and if you look at the law, with what we call the installment tax, and which is basically corporate tax that you pay, but now you split the corporate tax and pay it on a quarterly basis every 3 months, on the 3rd, 4th, 6th, 9th, and 12th month.
Right.
The corporation tax is net of expenses, because you take your gross and remove your expenses, which also includes VAT and excess duty that you've already have paid, and then say, what would have been my 30% of this, then pay an installment tax to KRA. The law says now, if you look at the minimum tax, to be able to pay the higher of 1% or the installment tax. 1% is on gross profit. Installment tax is on net. So
it's likely the minimum tax would be actually higher.
The gross turnover will always be higher than what you're paying as installment tax at any given time. Unless you're in a loss-making position, then at that point, then, and even if you're in a loss-making position, the minimum tax will always be higher than your installment tax. What that simply means is that businesses, you strangle the business in terms of cash flow. Because they are taking out 1% of their gross to pay. And you cannot offset that against any other taxes. That is the other disadvantage of the minimum tax. It cannot be offset against any other tax. Unlike VAT, which you can actually be able to offset input and output VAT.
Right.
Same thing to installment tax. At the end of the year, you can actually do your final computation of corporation tax and be able to offset the installment tax that you've paid. With minimum tax is a one-off payment, and you can't offset it against any other taxes. So what are you telling? You actually strangling the cash flow of an SME, because once they pay you at the end of 3 months, you simply telling them now, and they also have to pay you VAT that they've collected, excise duty that has been collected on that pay, at the same time that is being paid on a monthly basis. So are you really cognizant of the cash flows of that particular entity.
Right, and Phyllis, unfortunately, time moves so fast because we need to be concluding in very few minutes. But I'm just wondering, because you've been at KAM for quite a bit of time, and when government is coming up with these measures, we hear of public participation. And if indeed what you're discussing here is the true position, that there appears to be such a risk of strangling businesses, why then do these policies get passed? And where do we miss that point of reason to really save an economy that is already struggling?
The discussions around taxation are discussions that are held frequently because the reality is taxation is required to keep the country afloat, but we have to look at it holistically to ensure that we also, in the process of taxing businesses, do not strangle the same businesses. So what we are supposed to be doing is expanding production, using taxes like the value-added tax. People are already paying pay, corporate tax, and those taxes to really do what government needs to do in terms of providing services. But also increasingly, if you look at our fiscal deficit, it's continued to widen, mainly because of government expenditure. So we need to really look at ourselves as a country. Last year, we spent a lot of time as businesses saying, what costs do we cut? And even for myself as KAM, which we run, we cut our costs down to bare minimum. So as a government, we need to do that also and say, this is the reality of the situation. How do we minimize our costs? Because if we don't, we end up with a fiscal deficit. We end up then having to come up with measures, taxation measures to fill that gap. We put pressure on the Kenya Revenue Authority to collect those taxes. Eventually, we strangle the same businesses. You had the example just given by the SME in the room of what it means to the business. And then eventually you pass the cost to the consumer. So it's a vicious cycle. So what we keep saying is, can we have conversations about these issues? And on some of these measures, even excise duty, we demonstrate and show these are the numbers. This is the reality. You've put in place the inflation adjustment. It's been 25% over 3 years. It has resulted in reduced volumes in terms of collection and increased illicit trade. So at the end of the day, you're at the Laffer curve where you cannot collect anymore. It's now a downward spiral. So we have those conversations, and we urge government to take into consideration the views we give on these issues, because at the end of the day, the businesses in the room that are then the end user or the people who pay the tax, if they don't survive, it does affect the ability of government then to get those revenues. So even on this issue of minimum tax, we've had conversations, we've demonstrated, we've requested for a moratorium or additional time for these issues to be addressed, because you even had ISPAC, who are a neutral person in terms of taxation. There are real and valid concerns. This is a final tax. It is a tax on loss, because people are going to have to sometimes even pay from what they don't have because it's on gross turnover. So I would urge that as we go to the recovery, we did speak about the need to really look at economic stimulus and to keep things stable. We keep talking about a predictable and stable policy environment as the association. And in a time of COVID, we need a predictable environment more than ever. So we are saying, can we at least keep the taxes we are already paying? You already had from the SME, they are paying pay as you earn, they are paying excise, they are paying county governments for moving goods, advertising permits. If you look at the number of taxes we pay, and then the position that the businesses are not paying tax, I think we are not being fair also to businesses that need to survive during this pandemic. So we urge that we have a reasonable discussion on these issues as we move into the budget making process on how we are going to ensure that we give the economy room to recover from the impacts of the pandemic.
And one engineer, Lazaro, on Twitter is saying that double taxation, high electricity bill, higher rents and fuel prices are some of the challenges scaring investors and preventing youths from venturing into innovations. I don't know whether that's a true assessment of the situation on the ground, but there is that difficulty. And I'm just wondering, when you are to tax a business that is already making losses, what should happen? Because yes, when it comes to pay as you earn, whether you have a loan or you have a cost that you're repaying, you still have to pay payee. That is P-A-Y-E. So what should happen? Because yes, government needs financing, they need to collect revenue, but at the same time, businesses have to thrive.
So this, the allegation about taxing businesses that are making losses was directed at businesses that are benefiting from investment deduction allowances that are given by government. They are deduction allowances that were put in place that when businesses invest, especially large capital investments, that they would have been investment deduction allowances. And on the years they've had those, they are not then paying their corporate tax. So it is because government has given the deduction allowance, which has been given as an incentive for investment. So to come back and say the same businesses are not paying, they are constantly making losses, is unfair. And secondly, if it is clear that those are the businesses being targeted, I don't think we need to use a blunt instrument like minimum tax. We know who these businesses are. It's possible for KRA to audit them. But when we now go and hit the SMEs in the room and we hit all businesses because we are targeting a group that we are clear about, I think is actually not very efficient. It might have been better if there were very specific businesses to look at those businesses, as opposed to then coming up with a blunt instrument that cuts across the entire economy and affects all businesses, especially at a time like this.
Maybe just to add to that, and
yes, Makori.
that what Phyllis has said is that when you're going to invest into a business, you're going to inject capital into it. And that capital, depending on the business, is intensive. And what the government has done is just actually to be able to offer tax incentives for investors. With those tax incentives, then you anticipate that that particular business will not be able to make profits maybe for the first 5 years. Mostly it's between the first year to the 6th year. And once those tax incentives are over, if the company continues making losses, there's justification for KRA to levy the 1% minimum tax. Rather than putting a blanket on all businesses, whether you are a small startup or not, on a 1%, and there are businesses that are fully complying and paying their taxes religiously, including their corporate tax. So we should not punish the good citizens by just being able to lump a tax that is meant to net those whom we actually know who they are and can actually be able to audit them.
But Lydia, one of the challenges has been in this country that businesses come, I mean, they establish, they start doing their business, and they keep reporting losses, of course, in terms of how they do their calculations. And auditing becomes a challenge to really tell who is reporting the right thing. And that would appear to have informed this coming up with a minimum tax, so that whether you declare losses correctly or incorrectly, then you're still accountable. So how do we bring change to businesses to be accountable, to be truthful in their reporting, so that we do not have such kind of taxes that are coming in that would appear to be strangling businesses, yet they were supposed to correct an anomaly being implemented by business persons?
I would actually like to correct your notion that businesses are continuously just reporting losses. And yeah, it could be true for some of us, but I want to just maybe inform you that the KRA actually has professionals, auditors, people who actually, if they think that there's an anomaly in your books, they are at liberty, and the law gives them that to audit you. Honestly, there is no single sector anywhere in the world where the industry player does not know its customers. What we are saying is this: the KRA must know its customers. Let us single out problematic entities, deal with the problematic entities. If you are unsatisfied with the report I am giving, because it is the KRA which actually has allowed us to do self-assessment, but whenever there's a question as to how I have assessed myself, the KRA has been allowed by the law to conduct audits. So they already know the people who are in question, as the others have stated rightly so. What we are saying is this: this is a shortcut, and it's an unfortunate shortcut to solving the problem. You must actually, the KRA must find a way of getting more people on the table, creating consensus. More Kenyans must see the impact of their taxes. We must see where our money is going to, so that more and more people are getting onto the table willingly. To be honest, deep down, you know, the underlying issue in all this, and we have not spoken about it here, the elephant in the room is that for most of us, we are feeling really that our money is being wasted. Why are we having a 3.1 trillion budget if we cannot finance it? Honestly, you know, I cannot come and promise my children bacon if I cannot afford it. It is not proper, it is not right. So what we are saying is this: KRA, do your due diligence. If somebody is misstating, misreporting, there are proper channels, including the law, including the courts, to take care of that. Audit those people. Do not punish the good with the bad. It's really akin to throwing out the baby with the bath water. How is that going to benefit us as a country if 2 years from now, most SMEs are closed? Yet we all know the statistics worldwide, every economy, like Germany, 96% of their businesses are actually classified as SMEs. These are small and medium enterprises. Of course, what their medium and small is may not be ours. But what we are saying is that the SME is at the heartbeat of any economic growth. And that if the SMEs are not growing, you know, there's a huge rift between the Safaricom's, the huge players who are in the blue ocean, and who, strictly speaking, can afford this tax because already they are making way more money than the local mwananchi. We must have this middle. This middle here must be growing to link the two. And, and so how, I feel like, you know, yes, we do have a problem, but this may not be the right solution. What we are saying is that we need to still look for the right solution. And still, either way, we cannot again ignore the fact that we are within a pandemic. Even if this was the right solution, it is not the right time.
All right.
Yeah.
And I'm looking at the notice by KRA. 7.3 talks about a person who, upon preparation of accounts for the accounting period, establishes that the sum of the minimum tax and installment tax paid is higher than the minimum tax payable. The excess shall be considered as a tax credit to be carried forward or set off against the final tax liability. And then Part B says that tax payable from taxable income, if tax payable from taxable income is greater than the installment and minimum tax paid, the balance outstanding shall be paid as a balance of tax on or before the last day of the 4th month following the end of the accounting period. The tax liability, if the tax liability is less than the minimum tax, then the minimum tax will be the final tax. So meaning what Makori was saying, that it's a possibility that you always have to pay that minimum tax. Then if they are in a loss position, minimum tax paid shall be final. So there's no escaping, you have to pay that. So now, as we wind up on this, so Phyllis, what do you think is the best course of action? Yes, you're saying that the discussions are on, but then again, the 4th month is not far from now. If you are to say that the financial year of many businesses begins in January, so 20th of April, they have to do the filing. What is the next course of action at the moment?
As we conclude, I think last year we did give incentives to the economy, and that helped the economy stay afloat. And how we handle business this year is going to determine whether a lot of SMEs and businesses survive or whether they close down. And when they close down, reopening them, creating the jobs that they create again is going to be difficult. So as we go into the budgeting, the final budget, we are urging government to take into consideration these views. We have discussed them, we have shared them, we have given our thoughts around them, and we are urging the government to really look at them because they'll make the difference between a recovered economy post the pandemic or as we move through this period, and what could be devastating impacts to our economy in terms of job losses and loss of revenue, amongst others. So we urge government to really take into consideration these issues, not just on minimum tax, but even excise tax and the full taxation regime as we go into the budget for 2021, 2022.
Oh, all right, and Makori, so what would you say to businesses at such a time that they face this sort of requirement?
I guess before I speak to that, and Phyllis has rightfully put it, that taxes must be simple, must be convenient, must be easy to be able to pay. If a business is not feeling that way, then we need to be able to ask ourselves, do we have the right tax policy in place? I know this is one of the challenges that we've always had. As a country, we don't have a definite tax policy that is enshrined in law that defines and brings in predictability of paying taxes. I think what businesses are going to face is hardships, as Phyllis has rightfully said, because you're going to pay the number of taxes that are going to be paid. And even what you read, you know, if you compare it with the law, it's subject to challenge, because we know that the minimum tax is more or less like a final tax if you read that towards the end of the notice that was given. So therefore, what it means is that there's going to be a serious cash flow challenge to most businesses as they start to pay the minimum tax. Two, I don't know how we're going to cushion this, but most businesses will have, a number of businesses will have to close, and it's inevitable. Because when you've paid first and second installment and you realize that you don't have cash flows, the right thing to do is just close the business. That has an effect on many other taxes, including VAT, excise duty, and PAYE for those who have employed a substantial number of employees. So the ripple effect of this might be more than what you're seeing right now. So it's a high time we ask ourselves, what is going to be the impact of this? Even when we are in a pandemic situation, is going to make it even worse. How do we then structure this in a way that it is well taken by the business people and they can actually pay it? Most jurisdictions, the 1% is on net. You have to take care of the expenses.
Sure.
You can't say that 1% of gross and I've not taken care of my expenses. So it means that you are leaving me to go and borrow to come and finance the expenses of that particular business, which may not be the right thing to be able to do. So for businesses, I know it's going to be a hard balancing position in terms of their cash flows and being able to meet their obligations as taxpayers, but also meet their obligations as businesses to their suppliers, to their employees, and to even their stakeholders.
Right.
And that is where it's going to be the real challenge.
Okay.
But it's also being able to proactively engage so that we don't get into a position where we are losing out businesses. Because the whole idea is to be able to, for a government, is to spur the economic growth of any particular country.
Okay. Lydia, your final thoughts on this?
I would urge the government to, go slow, halt this, and maybe just bring us to the table and, find other ways to raise revenue. I do not want, I want my government to prosper. I would like my society to prosper. When I see most business people, we are law-abiding citizens who actually wish our governments well. But what we are saying is this, if you're going to push me to my death, then I might as well actually just move out, because as I told you earlier, we did not start businesses to pay taxes and to comply. We as entrepreneurs, we were starting businesses to make something for ourselves first. Sure. And so when it stops making sense, when we are not able to make that money for ourselves, that profit margin, then it's undesirable to do that business. And so we do not wish to be demotivated. We are holding on to hope, and we don't know how it's going to turn out, because as you rightly said, I am already calculating my numbers, preparing for 20th of April. But as Mr. Makori has said, and it is something I've decided that, if by May it does not make sense, it just makes sense to close. You'd rather stay with the capital you have and do something else. I don't want to default on my obligations. I don't want to come out of here with debts, being debt-ridden, and I'm not able to pay my staff. So it may make sense for most of us to actually go home. Go do something else. Maybe be employed, so I don't have to worry about minimum tax. But again, where's the employment?
Okay, all right. Thank you so much. Consumer Grassroots, they're tweeting the show and saying that on the earlier topic, that KQ is a national burden. Cartels in the airline, together with the individuals in top ranks of government, have formed a syndicate that has seen Kenya Airways lose more than 10 billion shillings annually as the syndicate gets richer. And there has been this allegation for so long. Nobody is ready to name the names, but that's our time on this conversation. Thank you so much, Phyllis Okiaga, the Chief Executive Officer, the Kenya Association of Manufacturers. We have Makori here from ISPAC and Lydia Bochere who is an entrepreneur in the small and medium enterprises. Asante sana for making time for us, and I hope that the viewer at home or wherever you may be watching us from, you've gotten better understanding of what the minimum tax should be and what this impact will be. After the break, we'll be talking to Peter Ndoro, who is the Chief Executive Officer of the Kenya Private Schools Association. We'll be taking stock of what has transpired since the 5th of October when schools resumed, and now the standard 8 pupils are concluding their KCPE as the primary school students or pupils take a break of 7 weeks to resume classes in May. After the break.